Hello and welcome back to Money Mastermind. Today, we are exploring the competition of NVIDIA stock versus Tesla stock. Now, let's get started. But first, if you enjoy this content or anything related to investing, be sure to like and subscribe for more videos like this. Now, let's get straight into it. In the world of investment, few events gather as much attention and speculation as the ongoing battle between NVIDIA and Tesla stocks. Both companies represent cutting-edge innovation in their respective fields, captivating investors with promises of revolutionary technologies and disruptive market forces. NVIDIA, once known primarily for its graphics chips, has evolved into a powerhouse driving advancements in artificial intelligence, gaming, and data center solutions. On the other hand, Tesla has transformed the automotive industry with its electric vehicles and renewable energy initiatives under the ambitious leadership of Elon Musk. The current market buzz surrounding NVIDIA and Tesla stocks reflects the intense competition and high stakes at play. Investors are closely monitoring the performance of these tech giants, eager to capitalize on potential gains or mitigate risks. Understanding the competitive dynamics between NVIDIA and Tesla is crucial for navigating this landscape effectively. Both companies compete for dominance in areas such as AI, autonomous driving, and sustainable energy solutions, shaping the future of multiple industries. Also, comprehending the factors driving the stock performance of NVIDIA and Tesla is essential if you are seeking to make informed decisions. Revenue growth, profitability, technological innovation, and market sentiment all play pivotal roles in determining the trajectory of these stocks. As such, analyzing their operations and market positioning is essential for evaluating investment opportunities and mitigating risks. In this video, we examine the details of the NVIDIA versus Tesla showdown, analyzing key drivers, risks, and opportunities shaping the future of these tech titans. NVIDIA's ascent from a graphics chip manufacturer to a powerhouse in artificial intelligence, AI, gaming, and data centers is proof to its remarkable evolution and strategic expertise. Originally recognized for its GPUs, NVIDIA swiftly diversified its portfolio and expanded into new markets, solidifying its position as an industry leader. Central to NVIDIA's meteoric rise are its groundbreaking products and innovations that have reshaped entire industries. The company's GPUs, initially designed for rendering lifelike graphics in video games, found applications beyond gaming, powering AI algorithms, scientific research, and autonomous vehicles. NVIDIA's CUDA parallel computing platform revolutionized the field of AI, enabling researchers and developers to accelerate computations and tackle complex problems with exceptional speed and efficiency. In addition to its hardware innovations, NVIDIA's software network, including libraries, frameworks, and development tools, has played a pivotal role in driving innovation and adoption across various sectors. From a financial perspective, NVIDIA's performance over the past decade has been nothing short of outstanding. The company has consistently delivered impressive revenue growth and profit margins, fueled by strong demand for its products and services. Investors have rewarded NVIDIA's success, driving its stock price to new heights and cementing its status as a Wall Street darling. Looking ahead, NVIDIA shows no signs of slowing down. With continued investments in AI, gaming, and data center technologies, as well as strategic acquisitions and partnerships, the company is well positioned to capitalize on emerging trends and maintain its leadership position in the rapidly evolving tech landscape. Tesla's rise to the top of the automotive industry represents a shift driven by innovation, sustainability, and bold leadership. At the core of Tesla's rise is its disruptive influence, challenging traditional notions of transportation with electric vehicles and leading renewable energy solutions. By popularizing EVs and advocating for sustainable energy practices, Tesla has reshaped consumer preferences and industry standards, catalyzing a global transition towards greener alternatives. Central to Tesla's vision of the future is its relentless pursuit of autonomous driving technology. Through relentless research and development efforts, Tesla has made notable progress in advancing autonomous vehicle capabilities, integrating cutting-edge sensors, artificial intelligence, and machine learning algorithms into its vehicles. Tesla's autopilot and full self-driving features represent milestones in the search for safer, more efficient transportation systems, positioning the company at the forefront of the autonomous driving revolution. Driving Tesla's journey to the top is primarily the leadership of CEO Elon Musk. Musk's charismatic leadership style, coupled with his audacious goals and fearless determination, has been instrumental in shaping Tesla's brand identity and market perception. Musk's ability to inspire innovation and disrupt conventional wisdom has gathered universal praise and investor confidence, driving Tesla's stock to unprecedented heights. Moreover, Musk's drive for innovation extends beyond Tesla's automotive endeavors, encompassing ventures such as SpaceX, Neuralink, and the Boring Company, further solidifying his status as a visionary entrepreneur. As Tesla continues to push the boundaries of technology and sustainability, its influence on the automotive industry and broader societal trends is likely to endure, shaping the future of transportation and energy for generations to come. Understanding the market behavior surrounding both NVIDIA and Tesla is crucial for assessing their stock performance and potential future trajectories. Market attitude towards NVIDIA and Tesla changes based on a multitude of factors. Investor confidence in NVIDIA is often influenced by its consistent revenue growth, profitability, and its ability to innovate in key sectors such as AI and gaming. Also, future prospects such as the expansion of its data center business and the integration of AI technologies into various industries play a significant role in shaping investor attitude towards NVIDIA. Similarly, Tesla's stock performance is closely tied to investor perceptions of its revenue growth, profitability, and its advancements in electric vehicles and renewable energy solutions. Market sentiment towards Tesla is also influenced by the company's ability to scale production, expand its product offerings, and maintain a competitive edge in the rapidly evolving automotive market. Also, macroeconomic trends, industry developments, and regulatory factors can significantly impact the stock performance of both companies. Economic indicators, geopolitical events, and shifts in consumer preferences can affect investors' feelings towards NVIDIA and Tesla. Regulatory changes related to emissions standards, vehicle safety, and data privacy may also pose challenges or opportunities for both companies. Overall, a comprehensive analysis of market dynamics and investor sentiment is essential for making informed decisions regarding investments in NVIDIA and Tesla stocks. By closely monitoring factors such as revenue growth, profitability, and regulatory developments, you can better navigate the stock market and capitalize on opportunities for growth. When comparing the competitive advantages and innovations of NVIDIA and Tesla, it becomes evident that both companies excel in distinct yet impactful areas, shaping their respective industries and influencing market dynamics. NVIDIA's dominance lies in its unparalleled expertise in artificial intelligence, AI, and data processing. The company's GPUs and AI-focused hardware have propelled it to the forefront of AI research and applications, with widespread adoption in sectors ranging from healthcare to finance. NVIDIA's dominance in providing high-performance computing solutions for AI training and inference has solidified its position as a leader in the field, with its CUDA platform serving as a key for developers and researchers worldwide. On the other hand, Tesla has carved out a niche in the automotive industry with its revolutionary electric vehicles and commitment to renewable energy. Tesla's electric cars have superior performance, longer range, and advanced autonomous driving capabilities, setting new standards for the automotive market. Beyond vehicles, Tesla's energy division offers solar panels, energy storage solutions, and electric vehicle charging infrastructure, furthering its impact on sustainability and clean energy adoption. While NVIDIA and Tesla operate in different sectors, there are areas of overlap between the two companies. For instance, NVIDIA's expertise in AI and data processing could enhance Tesla's autonomous driving capabilities, enabling more efficient and safer self-driving vehicles. Also, collaboration in areas such as edge computing, AI-powered analytics, and energy optimization could unlock new opportunities for innovation and growth, benefiting both companies and advancing their shared goals of technological advancement and sustainability. Assessing the financial performance of NVIDIA and Tesla provides valuable insights into their current standing and future potential in the market. In terms of financial performance, both companies have showcased remarkable growth trajectories. NVIDIA has consistently delivered impressive revenue growth driven by strong demand for its GPUs in gaming, AI, and data center applications. Tesla, on the other hand, has experienced rapid revenue expansion, fueled by increasing sales of its electric vehicles and energy products. Profit margins also play a crucial role in evaluating financial health. NVIDIA has maintained healthy profit margins thanks to its diverse product portfolio and efficient operations. Tesla, while experiencing changing margins due to production challenges and investments in growth initiatives, has demonstrated improvements over time. Valuation metrics such as price-to-earnings ratio, price-to-sales ratio, and market capitalization offer insights into the market's perception of a company's value. NVIDIA has historically managed a premium valuation, reflecting investor confidence in its growth prospects and technological leadership. Tesla's valuation, meanwhile, has been characterized by volatility, with fluctuations driven by factors such as production milestones, regulatory developments, and market sentiment towards EVs. Analyst recommendations and price targets provide additional context for you. While opinions may vary, analysts generally view both NVIDIA and Tesla favorably, citing their strong market positions, groundbreaking technologies, and growth potential. Price targets often reflect optimistic outlooks, although they are subject to change based on evolving market conditions and company performance. Overall, a comprehensive analysis of financial performance and valuation metrics can aid you in making informed decisions and navigating the dynamic landscape of the stock market. Both NVIDIA and Tesla face several risks and challenges that could impact their operations, growth prospects, and stock performance. One significant risk for both companies is intense competition within their respective industries. NVIDIA competes against established players and emerging rivals in AI, gaming, and data center markets, requiring continuous innovation to maintain its competitive edge. Similarly, Tesla operates in a highly competitive automotive market, facing competition from traditional automakers and new competition in the EV space. Intensifying competition could diminish market share, pricing power, and profitability for both NVIDIA and Tesla. Regulatory hurdles represent another challenge for NVIDIA and Tesla. Regulatory changes related to data privacy, emissions standards, and vehicle safety could impact their business models, product development, and market access. Adapting to evolving regulatory landscapes while maintaining compliance poses a significant challenge for both companies. Supply chain issues present a potential risk for NVIDIA and Tesla, particularly among global supply chain disruptions and geopolitical tensions. Dependence on critical components such as semiconductors for NVIDIA and batteries for Tesla exposes them to supply chain vulnerabilities, including shortages, price fluctuations, and logistical challenges. Also, both companies face risks associated with technological disruption and market volatility. Rapid advancements in technology could render existing products obsolete, requiring continuous innovation and adaptation. Market volatility, influenced by factors such as economic conditions, geopolitical events, and market behavior, could lead to fluctuations in stock prices and investor confidence. In summary, identifying and addressing risks and challenges is essential for NVIDIA and Tesla to sustain growth and navigate uncertainties in their respective industries. Proactive risk management, strategic planning, and resilience are critical to mitigating potential adverse impacts and maximizing long-term value for shareholders. The future trajectory of NVIDIA and Tesla stocks depends on a combination of industry trends, technological advancements, and company fundamentals. For NVIDIA, the continued development of AI, machine learning, and data-driven applications is expected to drive demand for its GPUs and data center solutions. The expansion of cloud computing, autonomous systems, and high-performance computing presents significant growth opportunities for NVIDIA, positioning it for continued success in the long term. Tesla's outlook is closely tied to the broader adoption of electric vehicles and renewable energy solutions. As governments and consumers increasingly prioritize sustainability and environmental consciousness, Tesla stands to benefit from growing demand for EVs, energy storage, and solar products. Also, advancements in autonomous driving technology could further improve Tesla's competitive positioning and market penetration. Investors looking to allocate capital between NVIDIA and Tesla should consider their risk tolerance, investment objectives, and portfolio diversification strategies. While both companies offer compelling growth prospects, they operate in distinct sectors with unique risk profiles. NVIDIA may appeal to investors seeking exposure to AI, gaming, and data center markets, while Tesla offers exposure to the expanding EV and renewable energy sectors. In the ongoing showdown between NVIDIA and Tesla, the potential winners may ultimately be determined by their ability to capitalize on emerging opportunities, navigate challenges, and execute strategic action. Both companies possess strong fundamentals, innovative capabilities, and visionary leadership, positioning them for long-term success. However, you should exercise diligence and caution, recognizing the inherent risks and uncertainties associated with investing in growth-oriented companies operating in dynamic industries. The winners in the NVIDIA versus Tesla showdown will be those who can adapt, innovate, and deliver value to shareholders among evolving market conditions and competitive pressures. The showdown between NVIDIA and Tesla highlights the crossing of technology, innovation, and market dynamics. NVIDIA's evolution from a graphics chip maker to a leader in AI and data processing, alongside Tesla's transformation of the automotive industry with electric vehicles and renewable energy solutions, underscores the transformative power of innovation and visionary leadership. Throughout this analysis, we've explored the competitive advantages, financial performance, and future outlook of both companies. NVIDIA's dominance in AI and gaming complements Tesla's leadership in EVs and sustainable energy, presenting distinct yet compelling investment opportunities for shareholders. Navigating the NVIDIA versus Tesla showdown requires a detailed insight of industry trends, company fundamentals, and risk factors. While both companies offer significant growth potential, wise portfolio allocation and risk management strategies are essential to maximizing returns and mitigating downside risks. In summary, the implications of the NVIDIA versus Tesla showdown extend beyond individual stock performance, influencing broader market trends and shaping the future of technology and transportation. As these two tech titans continue to innovate and compete, investors and stakeholders alike will be closely monitoring their progress and impact on the global economy. Thanks for watching Money Mastermind. If you enjoyed this video, be sure to check out our other videos for more investing tips. Don't forget to like and subscribe to stay updated on all our latest videos, and we'll see you in the next one.